everyone for joining us this afternoon. We are Bulletproof Agency Network, and we are effectively a collective of professional service organisations in financial planning, insurance, legal, and accounting and finance as well. So we're here as a collective to help to serve the digital creative industry and provide as much value as we can, be that directly or indirectly. And we've been running events now for a couple of years, and during lockdown we started running webinars as well, and we try and bring on people who are actually going to be useful and valuable to you as a business. So we have the WhatsApp community. Any of you are not already part of that community, then just drop me a message today on Zoom chat or an email, or get in touch with me on LinkedIn and we can arrange that. But we listen to what your challenges are and what sorts of things you're looking for help for in your business, and we try and get the very best speakers, and we're delighted to have been able to get to brilliant speakers coming in today in Mark and Danny, who I'll introduce properly shortly, from Cactus, and Karen Rayburn, a long-term friend and client of ours at MAP. So before we jump into the guest speakers, Steve just wants to do a quick update from his side. Mike has something that he'd like me to share as well, so I'll share that in the chat shortly, but we'll start with you, Steve, if that's okay.
Yeah, thanks, Paul. Hi, guys. You're in for a treat this afternoon. We always work really hard to try and bring you really relevant speakers, and we've certainly done that today. I think you're going to get a lot of value out of the session. From a legal perspective, yeah, Brexit is done. GDPR isn't. Data protection still. Thanks, Jamie. I love my toy collection. GDPR, Brexit is done, but GDPR isn't. Data protection is still here to stay. So it's a really good opportunity to have a think about your privacy risk throughout the business and throughout the work you do for clients. Other than that, we've actually seen quite a bit of M&A activity in the Northwest around the agency sector over the past few weeks. So that's been an interesting trend to note. And other than that, we're going to be sending out the newsletter shortly with some more content in it, but I'm not going to stand in the way of Mike anymore, so I'll move over to him.
I think Mike just wants to share something which I'm going to post in the chat, which is fine. So we'll move straight on to Mark and Danny. Guys, if you want to start sharing your videos, feel free to share your screen as well as and when you're ready, and unmute yourselves. So by way of an introduction, Cactus, again, very good friends of ours at MAP. We work on a number of clients together, both share a lot of the same values in terms of the wider cause of agencies. Cactus have a very thriving community online. Last count, over 1,000 members of their online community. So if you want to have a look at that, check that out, go to agencynomics.com. If anyone is already in that community and wants to give a shout out about how it's been useful to you, then please feel free to post in the chat. So the reason I wanted to bring Cactus on today, this particular topic, is around agency governance, and something that we're also very passionate on at MAP. Cactus are going to extend beyond finance today and talk about some of the best governance that they've experienced over the last number of years, helping many agencies to grow and successfully scale. Impressively, they were involved in 14 transactions across their client base last year, which means that they've had 14 clients that have either exited the business or gone through some sort of corporate finance transaction. And why that's useful for you is because they get to see lots of agencies. They get to see what buyers are interested in from other agencies, and a lot of the governance and a lot of the best practice that a buyer would look for are the same things that we can look for your businesses, whether you're looking to grow and improve your business or looking to sell. So they've got this concept of a dashboard and some of the metrics that you can think about tracking, but more than that, they're actually going to give some nuggets today in terms of what perhaps some of those metrics should look like as well. So delighted to have the guys on board. Mark is now ready to go, I think, with his screen shared. So I'm going to stop my video and over to you guys. As I say, sorry, last thing, any questions, pop them in the Q&A and I'll pose them to Mark and Danny in about 20 minutes time.
Okay, thanks for that, Paul. Hopefully, I trust you can see our first slide.
Yeah, all good.
Excellent, cool. Okay, so thanks very much for everyone that's on the call today. And thanks also to Paul and the Bulletproof team for inviting us. We really do appreciate it. So who am I? Just briefly, I'm Mark, obviously, as it says on the tin there. I'm the managing partner of Cactus, and we're the UK's leading agency growth consultancy. And I'm also one of the founding members of Agency Nomics, which with over 1,000 members now across Europe is the largest free community for agency owners. I'm also a qualified accountant, and at Cactus and Agency Nomics, we basically exist to inspire agencies. That's what gets us up every day. I've specialised, as Paul said, in consulting to independent agencies of various sizes across the UK for about the last 6 years, as a CFO, a mentor and a board advisor. And I've also helped a number of agencies sell, buy and merge with others, as well as carrying out a number of management buyouts over the past few years.
Good afternoon, everyone. Thanks, Mark. I'm Danny. I'm a managing consultant at Cactus. I work alongside Mark, looking after our clients in the north of England and Scotland. I've spent a lifetime in agencies, 30 years in the Northwest. I've been lucky enough to have spent 15 years running agencies in and around Manchester, including 12 years at Gyro, 3 years at Stein IS, and most recently at APS Group in Cheadle. I've spent a couple of years doing non-exec work with agencies in Manchester, including True North and Galibier, and I made the move to full-time consulting and non-exec work at the end of last year. So as Mark and Paul have already said, some of you may already know Cactus and perhaps be members of our Agency Nomics community. For those of you who don't know us, we're the UK's leading agency growth consultancy. We're focused on the independent agency space. Our model's slightly different from our peers in that we work as a CFO and CEO combination to give our clients support across all aspects of agency operations. We've got around 40 active clients who we act as board advisors and non-execs to, and around another 60 who subscribe to our mastermind cohorts, which are designed for smaller but growing agencies. And as Paul explained earlier, we've worked with about 1,000 businesses during the last decade to help them grow. Cactus's genesis, its roots are in this purple shed where our CEO and founder Spencer Gallagher started a digital agency in 1999, a great vintage for us Man United fans. Grew that business to a multi-million-pound digital agency called Blue Halo, which was sold in 2008 to Gyro International, who were and are the world's largest B2B agency and now part of Dentsu. That's where Pete and Spencer and I met, and I spent the next decade flirting with the idea of joining them until taking the plunge at the end of last year. We've authored an Amazon best-selling book. It's The Royal We. I had nothing to do with it. It was all Mark, Pete and Spencer, and it's about to have its second edition published this year. As Paul explained earlier, we also have an online community called Agency Nomics. It's totally not-for-profit and FOC. We have over 1,000 agency founders as members. And we've also recently taken a stake in the AIA, the Alliance of Independent Agencies. So, governance beyond finance. When Mark and I first started to work together, a common theme in our discussions with clients in our weekly Q&As was the importance of financial metrics in running an agency. So we decided to do a talk on this. However, when we started to plan it out, we agreed that focusing on just financial metrics just wasn't right, and that we needed to take a more holistic approach. So the dashboards that I've had in all of my, albeit PE-backed and highly commercial agencies, were usually owned and curated or enforced by finance functions, but certainly not limited to financial information. I think seeing metrics and KPIs as the property of finance is a bit dangerous, particularly in creative agencies where it plays to a sort of false narrative that finance is some sort of opposing force to creativity. As an agency grows and you start to get delineated departments with heads, having measurable KPIs is really important to allow you to manage those teams and those people. And those metrics can then be baked into each department's monthly reporting, their team's PDPs and the agency's talent management systems. So I guess the executive summary for today is agency governance is essential, but everyone knows that, right? It's not just about finance, although it may often be anchored in and owned by. There's certainly no right way of doing it. So today we're going to take quite an expansive approach to this. You'll need to find your own way. We've structured it around Cactus's 5 pillars of business. And we've also listed some typical agency benchmark KPIs that we'll talk through during the presentation.
So, as agency non-execs, we're often asked what are the key metrics that you should use and monitor and the regularity of these. So today we're going to focus on the monthly dashboard. The measures you choose are obviously going to differ by your agency type, your size, your sector, the work that you work in and your circumstances, both in terms of the metrics you use and the benchmark targets that you set. They're also obviously influenced by your own personal and corporate values and your objectives, along with your strategy and your life stage. So for example, if you're chasing fame to fuel the new client acquisition drive, you might have a KPI around that. So we're often asked what's the ideal number of measures. And this is often a difficult question to answer, as it often needs a bit of context about the agency's strategy and direction. However, what I would say is when I started to get to know Danny, I know he had 66 on his gyro precision and performance weekly dashboard, and that's probably far too many for a number of you in this audience. But I think perhaps 5 to 6 is probably too few. So we would aim for between 50 to 20 on a all-encompassing dashboard across the pillars of the business. And then again, in our experience, department heads should have their own KPIs, but ultimately everyone should feel a sense of responsibility towards these. And a good balanced scorecard should be pulling the data from a host of different sources for your agency. So not just the accounting like Xero or QuickBooks, but project management tools like Forecast, the new business systems like Salesforce or HubSpot, as well as obviously the cultural tools that you may use, for example, Office Vibe being one of the leading ones. So today we're going to take an expansive approach to that dashboard and cover a variety of options. And we'll also share with the end of you a number of metrics and recommended benchmarks, which we think you should cover both of a financial and non-financial nature. And we'll also look briefly at the systems which we would suggest to use for these.
So when we started to plot out today, we naturally started with financial measures, as if you don't get them right, you're not going to get to celebrate agency centenaries like I was lucky enough to do when I was at Gyro in Manchester. When I joined their global leadership team in 2008, I asked my new boss for a job description, and he had his chauffeur drive up to meet me because he had his own carbon footprint and quite a big ego. And gave me a piece of paper with 4 numbers on it. The largest was 780,000, which was the EBIT target for the year. There was a bottom line margin of 18%, and there was a staff ratio of 60%. And he'd also very kindly put my salary on there as well, which he'd increased slightly as well. And I kind of lived by those numbers every single day. And that's why Gyro Manchester, which, let's be honest, was perhaps a little bit less glamorous and not as large as some of our other network operations, was one of the most profitable in the network. But to deliver those 3 or 4 numbers needs a much, much wider view of the business. It needs focus across the key pillars of the business, across sales, across marketing, across new business, operations, finance, and people. Today, we've left the financial measures to the end. Typically, an agency dashboard will work sequentially from top-line sales, revenue through GP, giving you a gross margin, and then look at a series of cost efficiency or productivity measures like staff costs as a proportion of revenue through to your bottom line net profit or EBITDA. And obviously these figures will be tracked versus budget on both a monthly and a year-to-date basis. So drilling down into these numbers will logically start with sales. So that's the sales that will be recognised in that management accounting period. Some businesses ignore sales and focus purely on GP, but I think it's sensible to monitor both and the relationship between them in your gross margin. You should be monitoring them from a variance perspective. Are they higher and lower or lower than you budgeted, and why? I think there's no point monitoring something unless you're going to act on it. The dashboard will show you at the end of today's got a simple traffic light system to show variance. And we advocate all our clients run weekly sales meetings to monitor this, so you've got a fighting chance of addressing them through intervention. We've got a separate section on marketing and new biz that focuses on input, so calls, meetings, proposals. But in your revenue tracking, you should also be able to see the absolute new business revenue predicted in that period. And again, that should be versus budget. As a rough guide, I'd want to see about 20 to 30% of your revenue in net new business. Again, it depends on the type of business and the level of recurring revenue streams you've got. Your monthly dashboard should also pull through the likely future revenue from your new business and prospecting system and look at its weighted value. So that's the likely percentage conversion rate of your pipeline versus its total value. For existing client activity, it could be worth keeping track of the organic growth on a client by client level or globally. Another health check KPI you might want to include is percentage of revenue per client. We recommend that shouldn't be more than 20% in any one client, so it's definitely worth tracking the year-to-date figure. Your dashboard should also have a measure of client satisfaction. We recommend all of our clients use Net Promoter Scores and do these on a no less than 6 monthly basis. And finally, on a rolling and annual basis, you may want to score client attrition rates. So moving on to marketing and new business. Strictly speaking, I know they're separate things, but the truth is that they're opposite ends of the telescope. Whatever your activity, whether it's social posts, content creation, personal networking, paid media, outbound email, or more likely a combination of all of the above, that's the activity that puts prospects in your funnel. So your dashboard and metrics should look first at these inputs. So top level, what are you spending on a monthly basis versus budget? Your marketing budget should be no less than 5% of your revenue, and we recommend up to 10% for agencies targeting rapid growth. I'd then expect you to have a monthly measure of your marketing and your business activities, so events attended, calls made, meetings set, proposals. If you've a marketing and new biz lead, this will obviously be sat in their annual plan and their monthly reporting pack, and then sucked through at a high level into your dashboard. For our clients, for example, they all have a 42-point marketing plan, of which we expect them to action all on a monthly basis. You should also have a snapshot of marketing efficacy. So that's metrics like press coverage, social media likes, search rankings, inbound inquiries. For our clients, we recommend that these are analysed monthly and weighted by source roughly evenly across the 4 areas of our lead generation system. That way you can quickly assess whether certain areas need to be amped up. At the sharper end of the sort of marketing and new business sphere, your conversion and revenue performance should be a critical focus of your measurement. I've talked about the importance of maintaining your pipeline and making sure it's properly appraised and monitored to deliver on or beyond your monthly new business budget. But it's also a good rule of thumb to ensure that your total unweighted pipeline is equal to 2 to 3 months of your monthly GP run rate. And last but not least, you should be looking on a retrospective year-to-date basis at your conversion rate. So that's pitches and proposals to new business won. And I think if your qualification is rigorous enough and your pitching methodology is right, that should be no less than 50%. Personally, I would be targeting in excess of 70%.
Okay, thanks, Danny. So after marketing to drum up the opportunities and then winning the work, you've obviously got to deliver it, right? So in my experience, agencies often work on the presumption that as everyone is running at full pelt delivering client work, the agency must be efficient. But as I guess you all know, in reality, that often isn't the case. There's scope creep, not charged, over servicing, some team members hiding under the pretense of being busy. See that sometimes in board meetings. So how do we suggest monitoring the operations of the business? Well, firstly, the overarching KPI for us is team utilization. The magic number that I'm sure many of you that know Cactus will have heard us bleat on about is 64%. So simple maths here, 80% of 80%. So what I mean by that is all chargeable team members should be charging at least 80% of their time to billable client work. You know, and we say 80% because obviously you have to legally give the team holidays. You might over deliver deliberately, and you might use some of their time for pitching or for internal projects. And then there's also sick leave and admin to factor in. And then we've also got to consider how efficient everybody is. So, you know, hands up in the virtual room, who is uber efficient? You know, I know I'm not, I'm sure many of us aren't. So our rule at Cactus is 80% efficiency is a good start on this. So as I said, 80% of 80% is 64%. So we use this as a de minimis team-wide minimum utilization rate. So if the team as a whole isn't hitting this de minimis, then the agency will likely have problems with profitability and cash flow. You know, obviously, unless your day rates are abnormally high, or you're selling on value, I should say, or you're selling on value actually. So underline the overall utilization rate, we should have rates split department by department or service lines, and then look at any outliers regularly. Another highly important measure for any agency is their recovery rate, because this obviously has a direct impact on your bottom line. And I'm going to quote a partner here from our friends at an accountancy firm, Moore Kingston Smith, who said, and I won't put an accent on, "Are you working for free on a Friday? The average creative agency has a recovery rate of about 80%, which means they're not billing for 20% of the time they spend working on client work." So for us, recovery rates should be considered overall, but also on a job-by-job monthly analysis of hours spent versus those billed. And this should be carried out on live jobs rather than just the post-mortem, so that you can actually take action at the time of the work, not too late and after the job is closed, at which point you might not obviously be able to go back to the client very easily as well. So for us, a tolerance of plus or minus 15 to 20% is often used on recovery rates. And we suggest outliers, as I said before, are immediately investigated. So in terms of the last point on this slide, creative, technical and delivery measurements, these for us are something that should be in a dashboard. They can be very hard to definitively measure these, but we often say we should do this subjectively. So maybe on a project wash-up, when teams have assessed the project and scored, you know, their creative capability, their technical quality in the work. But you can also measure these things by things such as award entries and press releases.
Thanks, Mark. I'm mindful that Paul said he'd cut us off in a few minutes, so I'll move at some pace now. I think it's always worth reminding ourselves that we run people businesses, and therefore any dashboard needs to look at your most important assets and your largest cost line. I think nobody needs me to tell them how important people are. Hiring, retaining, training, motivating people is mission critical. I did hear at the end of last year some opinion that it would be less important as a result of COVID-driven labour supply issues, but I fundamentally disagree with that. And I think engaging people well is important now more than ever. And on top of this, I'm sure you've all seen a really healthy return to recruitment within the agency space. So I'm not a talent specialist, but I'll try and pull out some of the key metrics for you. So some of the more conventional people productivity measures, things like staff turnover, typically I target 15%. Sickness days, I target about below 7 days, which is the UK average, because we all work hard in agencies, right? And also things like cost and time to hire. In larger agencies, I've seen dashboards that encompass CPD hours, training spend, appraisal adherence, accreditation targets, and so on. It's also worth looking at employee net promoter scores. Mark mentioned earlier that a lot of our agency clients work with a product called Office Vibe. That's worth checking out. It's a freemium product. It uses surveys and gamification to give you live engagement measures for your team, but also you can keep an eye on sort of prevailing winds in and around the business. And I think one final thing which often gets overlooked in this area is the well-being of agency leadership. That's you guys. And so when we work as non-execs with agency founders, we'll ask them to score their energy levels across a couple of key areas each month in our board meetings, and we find this acts as an early warning system for times when we might be able to intervene and help.
Okay, so for us, the dark art of finance, something close to probably Paul and my heart. So this is what we would consider to be the last pillar of the business. So I'm very conscious this isn't a finance talk, but these and apologies if you can't see the slide too clearly. I'm not the creative in the room. So these are some of the main KPIs that I feel personally an agency should be monitoring as a bare minimum in their monthly finance dashboard. So hopefully you can see that. I don't know, maybe Paul will share this with you guys afterwards, but a few brief points to note, because this is really important on these points. There's a lot of conflicting messaging in the agency world on this. So for us, gross profits or fee income, i.e. you sell £100,000, you have maybe £20,000 of production costs and studio hire, whatever. So the £80,000 for us, the gross profit, or the fee income as it's often referred to. For us, the metric around staff cost to gross profit, the team costs must always include your full-time team, and it might include almost permanent freelancers. And we don't put any staff costs into cost of sales. That's quite a contentious point in agency advisor land, so I'm happy to answer any questions on that later. So for us, as I say, team costs are all overheads. Profit and staff costs should always include regular monthly dividends for agency owners that are active in the business. So too often we'll go into an agency and we'll see them saying their staff cost to gross profit ratio is X, but that X doesn't include the calculation of the regular dividends being paid for the owner's salaries. We all know that, you know, the majority of the small independents should be paid via payroll and dividends, so we do need to include that. And then for me, one of the banes of my life, because they're always winding me up about it at Cactus, is the current ratio, which is something I bang on about all the time, where this is a sign of liquidity. So this is calculated from your balance sheet, the current assets you've got, your debtors and your cash in the main, divided by your current liabilities, your PAYE, your suppliers, you might not have that many, your VAT, etc. If you've got greater than a ratio of, less than a ratio of 1, you've probably got cash flow problems. If you've got between 1 to 2, you're probably doing okay, but it can be tight sometimes. If you've got 2 to 4, you're pretty healthy in terms of cash flow. You don't need to worry for a few months. And if you've got greater than 4 and you're trying to grow your agency, you've probably got too much money or too many debtors in the bank. There's other bits to impact on that, but that for me is a key ratio that any agency should watch. And it's easy to get out of things like 0. I do have a whole finance talk. You'll be pleased to know I'm not going to do that today. So I'm going to come on to some of the tools, and we're nearly there now in terms of our presentation. So often for me, a small independent agency will be using multiple tools, probably paying for lots of subscriptions it shouldn't be paying for because they're not using them anymore. So that's always worth an audit. But there's lots of tools out there, you know, Xero for finance, for example, Google Analytics for marketing, HubSpot for your CRM if you decide to use the CRM. And for us, it's about taking ownership of these metrics. But, you know, often at a certain level, if you've got a finance person in, it's the unsung finance team that actually have to pull together a dashboard which will help the agency owner. And so for me, it's where do you start with all this? And should you contemplate using another system and another bolt-on, and maybe using Zapier or Zapier, as some people call it, in the middle to bolt all this on? And we've all, I'm sure Paul's seen this as well, we've seen many agencies in our time trying to build, you know, all singing, all dancing, automated systems that pull from different systems and take their time away from actually winning new business and delivering great creative work. So as much as there are all these systems that do great things, you know, if we want an all-encompassing dashboard, you know, no surprises, I'm an accountant in this room, you know, what would we suggest you use? We would suggest you use the spreadsheet. So there's probably no surprise to many, but in both mine and Danny's experiences, and Danny's got, you know, significant experiences different to mine, 99% of the insightful and informative dashboards we've seen over the years are always best pulled together in a simple spreadsheet.
Thanks, Mark. I know Paul's going to cut me off in a minute. So just to conclude, really, that there isn't one KPI to rule them all. And 3 that I got when I joined Gyro certainly isn't enough. And I definitely wouldn't advocate the 66 I had when I left there. What works for your business is going to be a reflection of you, your agency, and your values. I think one good discipline to conclude when we're coming from a standing start on this is to ask your leadership team to choose one key metric each. So it might be EBIT margin for your CFO, award wins for your ECD, employee net promoter scores from talent, and have your top level dashboard reflect only these that you can quickly access, but with the details sat in the systems behind them. I guess my only caveat would be working with Mark. I know that the finance function will want more than one.
So just to conclude then, the ultimate agency dashboard. Like if like me, your eyesight's really strained at the moment because all these Zoom meetings, this slide is not going to help you. But I'm sure Paul can send it out afterwards. It's also referred to, the next slide is in our book. And so we tend to, you know, build our dashboards on a spreadsheet around the areas that we've mentioned already. The final bit is the benchmarks in our book, which I know many of you would have read. Obviously, you know, we would use those as a starting barometer. So yeah, thanks again for letting us join today. Thanks, Paul, for inviting us and letting us overrun by a couple of minutes.
Thanks, Paul. No, that was great. You were pretty immaculate with your timing, to be honest. I was just coming on a bit earlier to scare you. Yeah, a couple of things I'd add to that. Fantastic presentation, guys. Just how difficult it is to try and create a presentation for lots of different people running different types of businesses, and you can't even see them in person either. So I do feel for you. But a fantastic way of, I think, getting people thinking about governance and thinking about KPIs. There is no one size fits all, I'm afraid. So not only are the results, the targets that you should strive for, different business to business, but even the metrics that you should track are different business to business. The overall categories are the same. and much of the metrics today probably would be useful for your business. But you know, that's why you need to spend time with professionals and time working on your business to think about what the right metrics are for your business. And you know, it isn't all about benchmarking. It's about being better, being a better version of your own business than you were last month. It's not about what other agencies are doing. We can waste a lot of time worrying about beating the competition or hitting other people's KPIs, but you might already be achieving far better KPIs than them, or a 15% net profit might not be good enough for your industry, or it might be too much of a stretch. So we need to think about what's relevant for you. Things like, do we include the dividends in staff costs is, again, a very contentious subject area. It depends on the amount of dividends you're taking out. So if you're taking salary plus dividends that are less than the average managing director of a typical SME or small agency, then you should include the dividends. But if you have had a good year and you're taking extra as a shareholder instead of purely as a director, then you might not. And then just a final bit on metrics. Someone explained this to me recently, and it really helped me to understand it better, that you have leading and lagging indicators, as many of you probably know. But there's this idea of the theory of success. So a theory of success might be something like, we believe that if our sales guy has more phone calls to get people into demos, we will get more signups. Now, you don't reward him financially based on making phone calls, because that's just an activity metric. You reward on the result, which is we get more signups. But in order to get more signups, you need to go deeper. So it's like this idea of a KPI tree. So the KPI is more signups. In order to do that, we have an activity measure, which is more phone calls, and an effectiveness measure, which is more demos. And if you track and recognize and celebrate more calls and more demos, and our theory of success is right, it will lead to more sales, and then your reward based on the sales. So I think it's a fascinating topic, KPIs, but there really is no shortcut for spending time on working out what's relevant for your business and where you are on its journey. I do have a question from Jay. So Jay was asking, probably one for yourself, Mark. It was about the utilization and recovery metrics, and she was asking if that's based on all possible working hours, i.e. something like 37.5 hours a week per full-time person.
Yes, it is based on that. Yeah. So can you just say the question again, Paul? Sorry, I didn't catch the first.
Yeah, is this based on all possible working hours, i.e. 37.5 hours a week? I think the way that I'm seeing that question mark is, if you're working more than 37.5 hours, the amount that you recover should be even higher, shouldn't it?
Well, yeah, it is, unless everyone's over servicing.
Yeah.
And then exactly. Then they're not recovering it. But yes, it should be based on a standard working week, whatever that be, whether that's 7 hours a day or 7.5 or 8.
Yeah. So you should be hitting those utilization rates, recovery rates, regardless of hours. Question from Sam. What is a successful route to finding your agency's USPs from experience? That's a big question.
That's a very expansive question.
Yeah.
What is this? It's this. I don't know what that's got to do with governance, but it's a good question. What is the route to finding your successful route to finding your USP?
Appoint us as your advisors, and we'll tell you.
That is a huge question. That's a huge question.
I mean, I know it's a cliche, but it's very much about putting yourself in your client's shoes, isn't it? First of all, because there's no point in having a USP that's not relevant in your market. So it's got to be something that your clients actually want and need, and then it has to be differentiated versus your competition. But it doesn't have to be like fundamentally different from your competition. It just has to be your way of doing it. So it could be that you do something similar to your competitors, but you've got a way of productizing it. So Karen's talk shortly is going to be really, really interesting and really useful for that. But she's found a methodology for delivering a service that many other agencies will say they deliver that service, but it's their way of doing it that they've documented and productized.
I mean, there's a 20,000 agencies.
Sorry, Danny.
Mark, do you want to go? Mark?
Yeah, sorry, just briefly. It's not the methodology that we would do. It's a much bigger, deeper dive into your own personal aspirations and so on, and what you really enjoy doing. Therefore, you're probably better at doing it, and therefore you probably get your your clarity on who you are and what you offer and your USP by working out who you are first. But there's a system which you'll probably all know is the Strategizer system, where there's the business model canvas type scenario and methodology. Sorry, and there's tools in there you can download for free that will help you in terms of defining your USP. And a little bit like you said, Paul, it starts with the customer. It works from what does the customer want, and then you back it back to yourself.
Yep. So
those tools, as I say, there's a whole toolkit for free in that well-known, I think it's a US system, isn't it? I can't remember, but it's definitely worth looking at if you're trying to define your USP without any external help.
Yep. Danny, did you want to add something to that?
No, I was just going to say I think there's 20,000 agencies in the UK, depending on your count, and to differentiate each of those is quite some ask. And to answer that on the call is beyond me.
Yeah.
Sorry.
Great. Okay. Wonderful, guys. Thank you for that. So are you okay to hang around for another half an hour?
Yeah. All I was going to say, Paul, is there's our emails if anyone has any questions afterwards, if anyone wants to email us separately, if there isn't the time today.
Great. And if anyone thinks of any questions in the next half an hour, Danny and Mark are going to hang around
follow the chat. Yeah.
Great. Follow the chat. Yeah, good idea. Or come on at the end and answer them. And if anyone wants to speak out loud, just let us know as well. If that's easier to answer your question, ask your question. Okay, so over to Karen. Don't mind sharing, Karen. There she is.
Hi.
I've got everyone's camera on my side now for some reason. It'll probably be better when you share your screen. So, you're not going to be sharing your screen for a lot of this, are you?
No, I don't have any slides. It's all up here.
So I don't know if everyone can see the non-video participants. I don't think you should be able to, but if you can, there should be a little button that you click to hide non-video participants. So it's just me and Karen. So Karen's not going to present because I know Karen very well. And I asked her to come on today for me to effectively ask her some questions on behalf of the audience and things that I think, knowing our community and knowing our client base, would be really interesting for us to get under the bonnet of Profitable Firm, because I've known Karen for 8 years.
9
years.
9 this year.
Wow. 9 years, and I think we were one of Karen's first clients.
I think you were one of the first 3 for sure.
Wow, first 3, and she was probably one of our, and she was probably one of our first 3 as well. So strangely, Karen runs a marketing agency servicing accountants, and we run an accountancy firm servicing marketing agencies. I have recently signed up for the 3rd time for Karen's Accelerator. I think lots of businesses have the idea of productizing their business and finding something that's scalable and a way of packaging up their IP, but there's a big difference between having the idea and having the execution. And I've been really proud just watching Karen battle away for years to try and create something that's of genuine real value. And as I say, we've been on it 3 times, so it's of real value, but also something that delivers value to her and her business as well. So I thought it would be good for Karen to talk to that today and explain some of the wins and losses maybe that have gone into building Profitable Firm and building its niche focus on accountants. Do you want to just start off by, in your own words, Karen, just giving us a quick headline about what it is that PF does and who it does it for?
Yeah, so PF is a creative agency working exclusively and only with accountants. As Paul says, we've chosen that niche right from the beginning. We had no question. I had no question in my mind that was my audience, and we'll talk about why. And essentially what we help accountants with is branding, websites, and outsourced marketing. If you're looking at the services we provide, but as we've been looking at what we actually deliver for accountants and what we've grown into, really it's about helping accountants to understand and love marketing. So not just understand how it works, but actually love it, enjoy it, and be personally involved in it so that they get the very best clients ever. So they don't just take the clients that they feel they have to. So they don't just get leads and go, okay, I've got some leads, so I guess, I better work with them because they want to work with us. But they get to choose the best kind of clients and only those, and craft their marketing so that only those are the ones who come. Everybody else qualifies themselves out. So that's the place that we've gotten to. As you say, Paul, it's been a long journey getting here.
What I think could be encouraging for people listening today is that accountancy wouldn't be perceived, accountancy firms wouldn't be perceived as being a market that is easy to A, sell to, or B, in particular, get to do marketing well. Is that a myth that you found not to be true, or is it that you've worked exceptionally hard to win them around?
Yeah, it's a really good question. I think the answer is no, they're not particularly easy to sell to. And that for us is part of the what interests us and what we enjoy about it, because the deeper you know an audience, especially a niche audience, the better you can sell to them. So after 9 years of, well, not just, 9 years of PF, but before that, I worked with a network of accountants, serving accountants for 5 years. And for the 5 years before that, I worked in an accountancy firm, and I'm a qualified accountant. So you're talking 20 years of working with accountants. So I and the team now know how accountants think when it comes to marketing. And actually, I would say it's one of the most difficult markets to serve well, because accountants with and Paul and I have talked about this, with the natural tendencies to be professional skepticism, which is a good, healthy thing, but then applying that to something like marketing, which is woolly. It doesn't match accounting with all of its rules and regulations. And what we're doing, I was about to say trying to do, but no, we are helping accountants to recognize that they are creative too. And that is a core principle that has come out of everything we share at PF, is all humans are creative. Creativity may mean different things than you think it means. I know, Paul, you spoke at an event we did, Creativity is for Accountants too. We talked about problem solving, and we talked about thinking about things differently. But understanding that difference of how accountants think has helped us to serve them better. But there are so many people, even in the industry that I'm aware of, who work to serve accountants because they see that as a money generator. And what my experience is, the people who go at it with that perspective always lose, because the accountants will sign up for their stuff or work with them and then get frustrated and then get angry and then feel betrayed or feel frustrated or back off. So a lot of what we do at PF is what we call marketing therapy. We're helping people to work through traumatic marketing experiences and realize, like, you don't have to blame yourself. You're not the problem. And you don't have to blame other companies either. Like, that's on them, but you can learn from it and you can actually come to enjoy marketing. So it is a tough market in that sense, but it's very rewarding because we love working with accountants. We love who accountants are. Accountants tend to be loyal and hardworking and visionary and family orientated and people that we enjoy spending time with and really good at what they do. So a lot of what we do in our marketing is to say we love working with accountants genuinely. We have to mean it. It has to be honest. You can't just throw it out there. And I always say this when it comes to working with a niche, is it needs to be profitable to you. You need to have experience in it, but you have to like them. And I would go so far as to say, if you love them, that is the best. If you like them, good, you can do that. But if you love them, if you really love that category of audience, then they will feel that and go, wow, this is not just a means to money for you. You actually want to help me.
So just remind me in a moment when you started with the Accelerator. So at what point in the 9-year journey you made the decision to build an Accelerator? And then if you could just then expand on what the Accelerator, before what the Accelerator is, what led you to want an Accelerator? Because I think there are pros and cons, aren't there, effectively? Because essentially, if I do my little spiel about how I see the Accelerator, you're helping accountants to do their own marketing, but you're a marketing agency. Mm-hmm. So, help people to understand how you came to the conclusion that it would be a good thing to help accountants and guide accountants to do their own marketing. When in the journey did that happen? How did you come to that conclusion? And then what does the accelerator look like?
Yeah, it's a great question. And the answer is that when we started, we were just helping accountants with marketing. So we were building websites, we were sending emails, we were writing content, we were doing marketing stuff, anything, all of it. And after a few years, we started to see patterns of the firms that were getting good results or were not getting good results. And we started asking why and where that came from. And we started to notice that firms, whether they worked with PF or not, some of them were getting great results and some of them weren't. And we thought, this isn't about money. This is the marketing results that the accountants are getting. It's not about how much money they spend. There are people who spend lots and lots of money and are not getting good results. And conversely, there's people who hardly spend any money and they're really personally involved and they're getting great results. So we pulled that together. I'm just going to share this. This is our most recent version of what we call the marketing map. And this is our summary. I'll just show you here. This is the original one, and we're now replacing it with the new one. The idea is that when an accountant came to talk to us about marketing, they often wanted to leap in here at the end. They're like, how can you help us get more leads, get more business? And over the years, we discovered that if we hadn't helped them understand how marketing works, not just how marketing works, but how marketing works for accountancy firms, if they didn't have an understanding about that, we were going to need to work through that. Then the three core areas that kept coming up always were looking at their brand, their website, and their plan. Those always became an issue if they weren't paid attention to. And then we had the regular content marketing, which is the accountancy firm creating blog posts and website pages and videos and socials on a consistent basis for at least 18 to 24 months. When an accountancy firm did those things in that order, then they began to get on a drip feed the kind of leads they wanted. And we always explain, this doesn't mean you don't get any leads in this portion, but what it means is if you try to skip all of that and go straight here, you will have problems. You will have to back up. You will lose money because you will have to double pay back to the things you ought to have done before, and you'll have lost time. So this is the newer version of the marketing map based on the principles are still the same. There's some training, there's some foundational items, there's the brand and the website, and the plan is in there as well. That's actually back in foundations now. And then there's content marketing, and then there's sort of this next level. So the Accelerator course, which is now a 12-week, actually, scratch that, I'm working hard at not calling it a course. It's a coaching group. That's what we're calling it, because it is about training, it is about learning, but it's about being personally involved in marketing. And as you point out, Paul, I suppose it could seem sort of backwards that we're encouraging accountants to write their own blogs, record their own videos. But the reason we created Accelerator was because we found no matter how much we worked with the accountants over the years, we kept telling them the same things over and over. And it takes a while for that to trickle in, not just to the accountancy firm owner, but to the whole team. So I'd say we've been running Accelerator for 6 years and we're 9 years in. So I'd say 3 years into PF was when I created what was originally called the Content Marketer for accountants. And it was a 12-month course. And we just picked the 12 things that we kept repeating over and over, that if accountants knew this, and those really haven't changed. This is our Accelerator sessions here. The only exception we've made is we've changed events to video, which has served us really well during the pandemic when nobody's going to in-person events, but everybody's doing video. But these 12 elements, other than video, have not changed in the last 6 years. And it's very important that the accountants go through them in order, because when they understand them in order, then their marketing is better. And oddly enough, what happens is when we set this ahead of time and say, this is the map, this is the way you need to do marketing. We've got case study after case study after case study of accountants who have tried to skip this and had problems. And conversely, case studies of accountants who have done exactly this in this order and are now in this beautiful place where they get a drip feed of the kind of clients that they love and enjoy working with and that make life good. You know, you're not doing it because you have to. So that is why Accelerator is so important, because we're learning if the accountant is not willing to learn and to be personally involved and to understand how it works, then all they're looking for essentially is a big Fiverr or people per hour or somebody to do what they tell them to do. And we see it as
that's not what most agencies are, is it? Like, most agencies cannot build a profitable model by just purely being an outsourced function of the business. So this is very much about conditioning the client, isn't it?
Yes.
In order to understand not just marketing, but actually marketing our way, like the PF way, because although I know you'll say, Karen, that this stuff should apply in any sense from a marketing perspective, the actual like tactics and everything else and strategies, every different marketing guru is going to have different opinions on what you should do. So what you're really doing here, we talked about it earlier when someone asked a question about USP, you're building your methodology that everything else can hang off, and it gives your whole team focus on this is how we do things the PF way. Now, yes, you're going to read books, you're going to go to webinars, seminars, and you're going to hear off other gurus in terms of how marketing should be done. But we've got our way, and if clients follow our way, we've got case studies that leads to success. So,
well, and I would even go further and say, yes, this is the PF way, but more importantly, this to the client, we'd say, this is your marketing map. This needs to be yours. And one of the things we're working on is how do we visually show where a client is at on their own personal marketing map and how far they've come. And what ends up happening is about 60 to 70% of people who go through the Accelerator end up doing at least one thing with us. The next step is this foundations workshop, which is one-to-one. And then of those, at least 20 to 30% of them move on through a project to monthly retainer, which is where we create custom content for the accountancy firm. We become their outsourced marketing department. And we were recently looking at all these numbers, and I had, interestingly enough, I had all the rough numbers in my head, and our marketing manager spent weeks looking at the data, and it was very, very close to what we had imagined, but it was very encouraging. Like, I'm glad that we now know that we have to begin with Accelerator, because that is what leads us ultimately to building up that retainer.
Yeah. So this all looks stunningly beautiful now, and I'm sure you've had some incredible results now after many years of refining this, but it wouldn't always have been that way, was it? I'd imagine you had some late nights trying to put all this together, times where you lost belief that it was going to be worth it all, failings, criticisms. This didn't just happen in a linear.
No, well, I mean, it didn't. Like, there is always the linear element of you start something and then you tweak it and you change it and keep doing it. There's two things that came to mind when you were saying that. One was when we launched the original Content Marketer, the 12-month program. We were launching it at a physical in-person conference, the XeroCon conference, and Xero, quite a big global company, had given us the opportunity to present and exhibit, and me the opportunity to speak to 3,000 or 5,000 people, accountants, on main stage about these 12 elements. So we had to get this right.
I remember.
And we had built this whole thing, and I was up till 1 a.m, 2 a.m, sometimes 4 a.m, every night before this conference, finishing stuff, tweaking stuff, getting this whole system right. And I thought about it the other day, because we've changed it significantly. We've actually simplified it a lot. We tried to make it this whole convoluted thing. And what we've discovered is what we need to have is the 12 elements. We need the people to show up for a live session every week. And then we need to give them a community where they can talk with us and say what they're working on. That's what we've simplified it to. But I don't regret any of those, not one single, late night, because you have to try the things to see what works and what doesn't. And the one thing that I found the most helpful for my mental space for where I'm at now is that this probably happens to many of you listening. I had this thing of like, this program is so amazing and there's so much in it and Xero's supporting it and it's so powerful and it helps accountants. We're going to have like hundreds, maybe thousands of accountants signing up to this. And the first time we ran it, we had 20. And I felt a little disappointed, but thought, I'm going to give my best to these 20 people. The next time we had like 30, then we had 35, then we had 30, then we had 50. We still get somewhere between 30 and 50 every time we run it, but we've actually learned that that's what we want. Like, we don't want 20,000 people signing up for this program where they watch videos and don't actually do anything. I would rather invest in 30 people and then actually help them.
And that's effectively a way of looking at it. It's 30 warm leads that you're being paid to turn into clients effectively. You know, you said 60 to 70%. I'm amazed by that. 60 to 70% of the people that come on the accelerator
they buy at least something. So foundations workshop, even a session with the team, so our onboarding kit, like we have other things that they can buy. And actually what often happens is they buy lots of little things before they end up doing a big project. There was a client recently who went through Accelerator twice, then brought her whole team, then bought a one-off strategy session, then bought this, and when I looked at what she had spent over the period of 6 months, it was far more than she would have spent if she just leaped straight into a big workshop and a big project, but she wasn't ready. That's where that marketing therapy comes in. She'd had horrendous experiences with bad website developers and website agencies. And, you know, I'm sure this happens to you, those of you listening as well, where people come to you and they're like, yeah, that's what the last agency said. And you seem nice and you seem amazing. And it seems like I like you, but I just don't know. And accountants are even more that way. And we come to them in our marketing and say, that is totally valid. That doubt and fear is totally understandable. We recognize that. You take your time. We will give you free stuff till kingdom come. You don't ever even have to work with us if you don't want to, but when you're ready, we're here.
How many people have been through the accelerator now then?
Well, I looked up the specific numbers. In our CRM system, the number of people been through Accelerator is 330. Well, it said 331, but the top one was a tester. So let's say 330. But then we had the 12-month content marketer, and I'm reasonably sure there's a few people who have been through it who for some reason weren't in that. So I'm going to stick with my original guess that I'd given to, which is closer to 500, because sometimes people join and they bring their whole team. So they pay a little higher fee. We don't charge a massive fee for doing that because we want to encourage it. And you've got the one person showing up every week, but then a different member of their team is showing up to certain sessions. So I'd say between 330 and 500 is a reasonable guess for the last 9 years.
So you've had all these leads effectively that previously either wouldn't have come to you because they've only come to you because of the accelerator, or they would have come to you and said, build me a website, write my blogs,
do things,
do stuff for me.
Yeah.
And you've taken them all the way back and actually coached them about what marketing's about. And you slowed down the sales process, spent more time with them, delivered more value, and got them to better understand how to work with your business and spend more money with you. And you've been paid to do it.
Yeah.
And
absolutely right.
When the accelerator runs now, I know that over time, your input into it is reduced all the time because it's becoming, you've got a system, so you've got something that you can train the team on. So how much time do you put into the program now? So at the latest accelerator that I'm going through now, how much?
Yeah, it's a good question. I because the whole team is involved in Accelerator now, and all of the prep and the planning and the marketing and the setup and all of those details are taken care of by our automation, by our team, our admin person, marketing manager. I usually spend half an hour to an hour each week looking over what I'm presenting, making sure I'm clear, checking to see if we have current examples of accountants' work that we're showing. And but I have delivered it so many times I could literally almost do it in my sleep. So you've got a half an hour to an hour of prep, an hour to deliver the live session, and then I usually personally spend about an hour, maybe at the most an hour and a half a week, giving feedback to the content created by all of those in the group. So they'll say, here's a video, here's a blog post. I tend to do quite a lot of that at the beginning, and then I begin bringing in team members, and the more content people create, the more team members do it. So I'd say at a big week, 3 to 5 hours a week on that program of my time, and then some time from the rest of the team. And I think it's some of the best time that I could ever possibly be spending.
Absolutely, yeah. Guys, feel free to pop questions into the Q&A or the chat. Just let me know if you'd like me to unmute you or share your video and ask Karen a question out loud. A couple more questions from me, Karen. So what advice would you give to other agencies that are thinking about productizing their services?
About productizing, I think for productizing, it comes back to how well you know this particular audience. I think anything you productize either has to be something that's your way of doing that applies to everybody, or it's a way of doing things for this particular group of people. And I remember, you'll know this, Paul, when I started PF in the early days, I had a business partner. And this business partner's idea was that we could do all this great stuff for accountants and then just replicate it, just churn that out for lawyers and for creative agencies and for whoever.
They're all the same. Yeah.
Yeah, they're all, yeah, that's it. Like, it's just like a machine and you just churn it out. And we actually, that key point was what ended up causing us to part ways and for me to buy him out and own PF outright myself, because I maintained, and I still to this day, it was the best decision I made for the business, was to say, I don't think that will work. Matter of fact, I know it won't work, because look at what we've done with the marketing map and the case studies and the stories and the accelerator. This is based on how accountants think and what accountants' experiences are and their fears and their doubts and their concerns and their worries. And yes, in principle, you could take something like a marketing map and say, first you get some training, then we'll do a foundational workshop. We'll look at your brand and your website, and then we'll do some consistent marketing. But the order, the services, the way we deliver them, the way we explain this to accountants, that is unique to them, and it comes from 9 years of serving them and of understanding them. So
but also you know where to show up, you know which events to talk at and speak at. You're not going to talk to any event that's not a room full of accountants. You know what communities to be at online. You know where to hang out, you know what message, you know what their pain points are, you know how to build up your contact list because you know the niche. So I think what was really important from what you said there is I realized from my experience and my gut feel that wasn't going to work going into other industries, because it's all well and good us consultants saying you shouldn't be too focused in any one sector, but clearly there are pros and cons of niching. But if you were maybe in a more, accountants, touch wood, aren't going anywhere, but if you were maybe in a more high risk, more volatile industry, that might be a bad idea to put so much focus on one industry. But
there's always a risk to an exclusive niche, always. And that is why an exclusive niche is, I believe, the most profitable thing you can do if that's for you. So when I'm talking to our accountants who are considering a niche, I mean, I know, Paul, you have a particular niche of an industry, but when somebody's considering it, we just ask them, well, is it profitable to you? Do you have experience in it? And do you like them? And if you've got that, you can try a couple niches and then maybe it ends up being one. And whenever somebody goes, I'm thinking of exclusively niching in this, but I'm worried that something will go wrong, or I won't get enough business, or what about these other, clients? And there's always a risk. I remember thinking at the beginning of pandemic, I had no idea whether what would happen. I'm like, if businesses fail, then accountants don't have the work to do, and then they don't hire us. And actually the opposite has happened. We've had the year with the highest sales, the highest profits, and the most work we've ever had, and hired the most people, and we're still hiring. So it could not have gone more powerfully for us, but that's because accountants are essential workers really in this time. And it could have been different. So there is always that risk.
I think my expectation based on dealing with our clients, dealing with the community, is that there was probably going to be more appetite for productizing than there is niching. So some businesses would genuinely find it difficult because they are already working with such a diverse client base, and they are concerned about the risks of niching. But I think the productizing piece, often, not everyone on here runs a marketing agency. They might run a software development agency, a mobile app agency. We've got a PowerPoint specialist agency on the webinar today that they've built a business around delivering like world-class PowerPoint presentations for huge companies. But the productizing piece for me is about, imagine if you couldn't sell your service anymore. So if you couldn't sell marketing services, how would you make your money? And that's about thinking about, well, what is the IP that we've got? What's the knowledge and expertise that we've got in this business? And if we're not allowed to sell time for money anymore because people are not allowed to buy our time, how do we deliver value and get paid for that? Would you agree with that?
Yeah, well, I'd say it's also about scalability, certainly for us. Like, I looked at this 5 years ago and was like, I have all this knowledge to share with accountants. I want to reach more accountants, but I don't personally want to be the one who always has to do these things and say these things. So we're currently beginning to build, like, there's a PF team member that comes in, especially as we move on through the accelerator, a new PF team member comes into each one and they begin sharing and leading as well. And eventually we'll probably get to the point where some of the team are leading like a lower level and I'm leading the higher value one, simply because there's only so much time that you have. And because of what we have, I started putting up a G sheet together of the key points that must be covered in each accelerator and the key examples and the key calls to action for every session. And I knew all of that off the top of my head, but now it's in a sheet and the team access it. So when they come to help me deliver session 4 on branding, they look at it and go, oh, right, okay, so the key point is your brand is not for you, it's for your audience. Got to make sure I make that point if I make nothing else. And we encourage them to sign up for a foundations workshop, which includes branding as the call to action. So that way, no matter who runs it, then we're all following that same process. And that is what makes it scalable. That's what makes it profitable. And that's what builds authority and experience in the mind of the buyer. So I'm working with a book coach. I'm writing a book on the 12 elements of the accountant marketer. And I'm working with a book coach. And when I looked at lots of different book coaches and strategists to work with, the one I ended up liking the best was the one who did things like I did. She's got a structure, she's got a system, she's got a workshop, she knows what she's doing and it's visually apparent. And we find that with accountants, when they see the marketing map and watch the marketing map video and get their questions answered before they even asked them, they go, this is clearly not your first time doing this in this way.
It builds
the
trust.
Authority is super high.
Yeah, it builds trust because the client gets to see that actually, as much as anything else, they can hold you accountable. So we've seen your graphic that tells us you're going to do this, this, and this. So they get what the journey needs to look like rather than feeling like they're taking this big plunge. It's, I hope this works out and I hope they provide a good service. It's like, actually, I can see that there's a structure to this. And like you said, done it many times before and that they're in good hands and they are the student. You're in control. And they need to listen because you've done this many times. Sam's asked.
I did have another point on that one about the. No, it's slipping away. Go ahead with that question. I'll come back to it.
Sorry. Yeah, Sam has asked, how did you go about finding the right experts to talk in your accelerator sessions? E.g., what channels did you use?
It's a good question. I went about that, Sam, by asking myself because I'm the person. So I am the one who leads every accelerator session. Now, it's a really good question because back when I started PF 9 years ago, we had this brilliant idea to help accountants deliver webinars. Remember that, Paul? They were called the Business Builder webinars. And so if Paul would sign up to it, we'd have these pre-prepared webinars and there'd be a different guest speaker for each topic. And then Paul would deliver those with his branding on them to his clients. And we very quickly worked out that that wasn't effective for the accountants. And it's not effective for me because you want to build trust with you and your team personally. People, we know it, but it is worth repeating every day that people still make connections with human people who are all part of a company. So actually, the biggest thing that we've done that has helped our company the most in terms of the accelerator recently is bringing the PF team on, because the clients and prospects started saying, oh yeah, Kreja, I remember her from the design thing. So Kreja, who is one of on the design team designing my PDF guide, I feel a connection to Krisha. I've seen her, I've heard her speak. I know she knows what she's talking about. So when Krisha tells me page 5 of my PDF guide is not going to work the way I want it to, I will listen to her because there's that authority there. So it's me and the team. We are the experts. And that's what we tell people. We're like, listen, it's not that, I mean, I'm constantly recommending books. Read StoryBrand, read 24 Assets, read They Ask You Answer. But when you work with PF and when you work on your marketing for your accounting firm, listen to PF because we've been there. And it's an accumulation of what we've learned from other accountants who have done it right or done it wrong.
You've made sense of it all, and you've made it practical. But I think, by the way, Mark and Danny, if you want to start coming back on, if you're still there, still available, just share your videos and unmute yourselves and get involved in the chat. It takes a lot of courage, I think. So Sam's question there is a really good one, because some agency owners will think, well, we're not sure we're credible, we're not sure we've got the expertise, not to deliver their service. They've absolutely got the expertise to deliver service, but to deliver something like an Accelerator. But you obviously weren't as polished 6 years ago as you are now. You know more now, you're more experienced, but when you first do it, I imagine it's quite, terrifying presenting yourself as the expert in an area.
I think what I felt was I knew that I knew my stuff. I knew that I was right and that these were good things to share. But what I didn't have then that I have now is the proof of it from the people who have been through it. Because I can talk all day till kingdom come. I have no problem talking and sharing things. But if people don't listen and actually do them, then you don't have as much of a impact. You're just talking. And this is why when I originally looked at the Accelerator, I thought about doing here's a video, here's the workbook, here's a worksheet, do it yourself. And I thought, I know my audience. They will pay 395 quid for this video course, and then they will watch 3 videos, and then they will stop, and we will have taken their money and they will not have done. And that is not okay with me. That's not okay with my integrity pillar. And it's not okay because there's so many other companies doing that and just churning stuff out to get money. And when you look at the amount of time I spend, the team spend, the marketing we do for Accelerator, we don't make money on the Accelerator, but we do make money because of like what Danny and Mark were saying, the flow through from that is that every time we run Accelerator, we always sell foundations workshops and then brand projects and then website projects and then monthly retainers. So we do, but we're in it for the long game. And most beautiful of all, everything we do, we tell the accountants, we're just living out what we tell you to do. We tell you there's a progression model. You start with awareness, then you move to a small free thing, then you move to a small paid thing, then you move to this, and they go, oh, wait a minute, that's what I'm doing right now. I've just bought your Accelerator, and we're like, yes, now you know how it feels.
Yeah.
And they love that.
So Mark and Danny, I'm interested, how many businesses were you at Cactus actually involved in helping to sell last year? You said 14 transactions, but some of those would be MBOs, etc.
Yeah, there was, in terms of sale, I think that was 9, I think. Nine, I think, Paul, yeah.
And did you see any patterns in terms of those businesses that were sold? Like, was the common patterns in terms of what made them attractive to a buyer?
Well, one of them, it was really interesting listening to Karen's, and I'm an accountant. So as I said earlier, I've spent 18 years escaping to get out of practice from 18 to 36 and then done this ever since. Yeah, one of them, which sold in this, I did the deal with it in December. The sole owner of that agency had basically spent a number of years prior to setting up his agency 12 years ago in the insurance sector. So a little bit like what Karen said, had a bit of an upbringing and schooling in insurance, then went out and spun out an agency on the back of setting it up with a well-known name in the insurance sector that brought him, the first couple of clients. But the owner, the sole owner by the end, absolutely loves the insurance sector. Perversely, some of us love accountancy, so he lives and breathes in the insurance world. And what did he end up doing? Building, web and mobile apps for the insurance sector. So actually, when it came towards the point of we started to talk to him about, are we going to do a deal? Let's look at M&A at some point. yeah, you do all these stuff that, you know, we do as a day job, kind of line up the agency, refine it a bit, tweak some cost side of it, start thinking about IP, all the rest of it, you know, way ahead of a deal. But when it came to the acquirers, what were they interested in? They're interested in the fact that this guy had all the connections in and around London, because that's where he's based. There was a geography point. The acquirers were from overseas, and I'm not saying anything that's not public knowledge, because it was, you know, it's out there now. So, you know, the acquirers from overseas wanted the geographical presence, irrespective of COVID. You know, they wanted the London presence. They wanted to go and work with the big names in the insurance sector that are in London and in Kent. Funnily enough, there's a lot of insurance companies out in Kent, based out there, and the guys that the agency we work with and help sell, they had all the connections. He had all the connections, and he also had the passion, the expertise, and his team knew all about the insurance. And then they then started to diversify. They'd gone narrow and done what they're really good at, and then they realised the mortgage sector isn't actually that different. So they started to work in the mortgage sector a little bit. So they started to branch back out again, and hence grow the agency out even wider. So from an acquirer's point of view, it was the specialism definitely, and it was the geography bit. And you know, a few people. There's been quite a lot of M&A sort of blogs and articles out recently from all different advisors, and the M&A world is very active actually in the agency space. Last year, it really has people have this misconception, some owners and that it's all gone quiet. It really hasn't, and the prices are not chipped away at. The prices are probably as good as they've ever been.
Agreed.
Yeah.
Great. Danny, Gyro, was it that you worked at?
Yes.
For a number of years.
Well, 15 years.
Yeah. So they obviously achieved it. So what was the turnover? You said EBIT was about 760. So
Gyro was and is the world's largest B2B agency. They're now part of Dentsu, and they're part of Merkle.
Yeah.
So the Gyro business that I joined was about 55 million turnover, and the Manchester operation I ran. So I ran a business called Cicero. I don't know if you're probably not old enough to remember it, but that was acquired by Gyro International in 2008. So the turnover of that business was about 6.5 million.
Yeah. And what did you see in those businesses that you think it was key to them being able to scale and sell and be so successful?
Well, it's interesting because the Gyro was, and I sound like a Gyro evangelist here, and there's a degree of that when you've worked for somebody for 15 years, but Gyro was the first global B2B player. And if you look at some of the other people in the market now, like Stein or MSQ that I worked for a couple of years, they're trying to put together global plays, but nobody's done it with any real credibility. Ogilvy have tried it, and Gyro did that 12, 13 years ago. So I guess in a roundabout way, in answer to your question, all of the businesses that they acquired, and it was made up of 22 different acquisitions, including Spencer's business, they were all focused on the B2B space, which sort of 15 years ago wasn't particularly sexy and wasn't particularly attractive.
We've got some more questions popped up, I think.
Just while you're looking at them, Paul, actually, I found probably interlinks with that lady that asked about the USP, and actually Karen's backstory is fascinating. You know, whether I don't know Karen, I know we were joking early on before this.
We are best friends.
Yeah, we are best friends, as we keep saying. So, you know, you were an accountant. You said you were an accountant. Now you must still be working in the accountancy world. You said it in the talk. You know, you do enjoy the accountancy world, and that came across.
I enjoy the accountants, Mark. I don't enjoy the accounting.
Yes,
and that's why I ended up where I am. And that's probably why I appreciate accountants so much. You know, I've got MAP as my accountants. We've got another accountancy firm that help advise because I'm a dual British American citizen. So I've got to do US taxes. So I am so grateful for accountants, and having done the training and done all of that, man, that is not my area. You know, I'm definitely solidly in the creative space, but that is what enabled me to create PF, because I'm a creative who happens to be a qualified accountant. And what we're doing is helping qualified accountants to tap into their creativity.
I think what I find quite interesting with your business is obviously going very well, and it's great that the productizing stuff, and I've followed you for a while, so I've seen what you're doing. I think it's fantastic. But is a number of years ago, accountants were not in the modern world. I can kind of say that confidently because I was that person, you know, across all different sides of businesses and practices, and I know a lot of accountancy people. And you know, if you think back a few years, we weren't in the cloud and so on. Things have changed radically, and actually they've started to appreciate much more the value of marketing, which they probably didn't before. I suppose the point here is, what other sectors does some of the agencies on this call be thinking, well, hang on a minute, that industry is now shaken up. It's ripe for us coming in and doing. And I think, again, that's something that with some of our clients, we literally, that is some of the finding a USP bit to that lady's question is around that. Well, what sectors are changing? What do you offer? What can you offer? How can you tweak your proposition, in the way that you've done it? And I think if people aren't clear at the moment on what they're targeting, that's probably a good research piece, and a bit of quality time invested in that is really important.
Yeah.
And we always encourage people to start small, start safe when it comes to a niche. So just create a website page, a couple of blogs, a little bit of content, and see if it picks up. I set up PF 9 years ago, but it just kept growing and growing and growing. I had no intention to build a whole agency with a bunch of team. I was happy in my little MacBook in my second bedroom in my flat, working away with some outsourcers and freelancers. But then I got to the point where I was paying so much to the outsourcers and freelancers, I may as well have a team. And our profits actually quadrupled the year that we got rid of all the outsourcers, almost all of the outsourcers, and did everything as a team, because we're communicating better and faster and serving the clients better.
I get the feeling Danny's seen a lot of money spent on freelancers in the past, with that nodding head and the stat in your presentation.
It's something that Mark and I see often when we go into businesses. People who've got £150,000 a year freelance bill that you can internalise for a third of the price.
Yep.
But a lot of people are understandably risk averse, and also that sort of creeps up on them, doesn't it? To use the accounting phrase,
it does.
Creeping crumple. They don't realise it happens, and then it takes somebody to look at their P&L and say, what on earth is this line item?
You've got to love what you do as well, haven't you?
Yes.
We were on a call, Danny and I, yesterday with a new client, and this chap knows he's got a certain need. I won't say in what sector because he might go down that route, but he was like, I know I make quite a bit of money in this. I know I could specialize in it. I know I could niche, but I don't bloody like that sector. Excuse my language.
Flat no.
He's like, I can't get up every day or every Sunday night, that scenario, and do it. So you've got to find what to elaborate on that.
Just to elaborate on that, the vertical sector that he operates in is really profitable, but he's a creative by training and trade. And the creative standards in the space just don't float his boat, and the two things aren't reconcilable with what he wants to do.
The biggest reason it won't work is because the audience will feel that. They will feel that he doesn't love them, and will feel that he's not enthusiastic, and they will feel like they are being sold to in the worst kind of selling way. And
he's not going to stay up till 2 o'clock and 4 o'clock in the morning building his presentations if he's not got the passion. Yeah. There's a question here about, it's a slightly leading question, Karen, because it's how much have you been able to raise your prices?
I thought it was a very interesting question. Like, I actually like the question. The question is presuming that the prices will go up. So a couple ways to answer that. The first is actually the price of the way the accelerator is now. It went down from what we originally started with, because we had a 12-month program. I think we charged it was roughly £1,000. We have a staged payment. So if you book early, you get the early bird prices. So it was about £1,000, and people paid more as they signed up close to the time. So then we created the accelerator, which is the 12-week at the same time. So we thought, and I'm going to say right here categorically wrongly, we thought because it's shorter, we'll charge less because we can run more of them. I did not think through at the time. I didn't realize we were going to end up dropping the whole 12-month thing and only doing the 12-week. And I just didn't think through the value of it is the same. So we actually dropped
more because people are having to invest less of their time to get the results.
Yeah. So now the early bird pricing, the accelerator is like $395, and people spend up to £1,000 close to joining time. But what we've discovered, lots of learnings, no failure, just feedback. And what we have learned is it's not about the money. We could charge 100 quid, or we could charge £4,000, and the issues and the problems and the objections would be the same. I had a guy come to me about a month ago, and he's like, Karen, I've been following your and PF stuff for years. I love everything that you share, but I dropped £4,000 on somebody else's course that did not work for me. Now I feel frustrated. Now I feel angry. Now I feel like I wasted my money. I love PF. I love everything that you share. I just want to make sure I'm using my time well. And is this the good place to start? And I said, first, I'm so honored that you came and asked me, the runner of the course, is this a good idea? Because you trust me to say yes or no. And I said, honestly, mate, this is where every accountant needs to start. And this is why. And it's not about the money. 395 quid is not the point. The point for him, it was, $695 or whatever it was up to. The point was an hour a week of his time plus another hour. And would he actually get something from it? And we were able to say, here's all the case studies. Here's all the stories. If you do these things, it's very likely you'll get from it. We're not going to make guarantees. We're very careful never to make guarantees because it's dependent on the person who comes. And so with all of that in mind, and now that I'm writing the Accountant Marketer book, the new stages, the progression model will be they buy the book, 15 quid or 16 quid, whatever the book will be. Then there will be a do-it-yourself course with the videos and the workbook and all of this thing based on what we know works that will be at the lower 395 kind of level. And then there will be this coaching group, sort of the way we have it now, but minimized, like no more than 15 people, a lot more intense. And that's going to be about triple the price. And we can do that because we know the value of the content, and we know the value of the personal involvement and the feedback and the connection. So actually, in one sense, the price hasn't massively changed, but what we've learned about it has been that this item that we are selling is not about the money for the person joining. It's about the mindset. It's about the doubts. It's about the fears. And it's about helping them to say, I'm going to step into this and I'm going to be personally involved, even in a small way. And I'm going to begin to trust PF if they do over a slow period of time. And that builds the best relationships, which is what we're going for, good relationships.
And also you've tested, because there is no one right price. You've tested it over time.
Oh my word. We have tried just literally every price. We've tried every price. We've tried early bird. We've tried certain times of day and all the different things. And at the end of the day, it doesn't seem to matter. The team was laughing about this the other week. They're like, well, heck, we may as well charge, 10 grand for it. But we do want it to have a meaning.
So going to wrap up. It's great to see that we've got so many people still on here listening to us, which is fantastic. We will get the recording out to everybody along with slides from Danny and Mark, and any links, Karen, that you think will be useful for us to pass over, such as the marketing map so that everybody can see it. Agencynomics.com links so that people can go and check out what you guys are doing, your community, and all the other wonderful stuff that you've got to offer. We will also provide information about next month's event in terms of timing, dates, and speakers on that as well. But for now, just all's left is for me to say thank you to everyone for sticking with us and giving us your time. Thank you especially to Karen, to Danny, to Mark for speaking to our community today and giving some real value. It's been great.
Thanks, Paul.
Pleasure.
Thanks, Paul. Thanks, Karen.
Thanks, everyone.
Guys, have a
Thank
good day.
you.
Bye-bye. Bye.
Bye.
Bye.